trust, I'd like to express my deepest appreciation to all the shareholders who continue to place their trust in our company. We do not take it for granted. We pride ourselves on maintaining the high road, even as our share price has come under pressure from others who stand to benefit financially from such a decline. However, I would be remiss not to acknowledge the real toll this has taken on people who have invested their hard-earned savings with us. As a large shareholder myself, with significant interest tied to the success of this company, please know that I hear and feel every one of you. So with that in mind, it's time you heard directly from me all the reasons I remain confident in NPT's proven business model and ability to create long-term value for our shareholders. Let's begin with the facts. For 20 years, our strategy has been focused on making profitable investments in hospital real estate. Through this time-tested and transparent strategy, NPT has grown into the second largest owner of hospital real estate in the world. Our business model has contributed to the clinical excellence in hundreds of hospitals globally. To put some numbers around that, our portfolio currently includes approximately 44,000 hospital beds in over 400 properties across 10 countries. Today, our total asset value stands at $19.2 billion, having grown 118% since the end of 2018. We are incredibly proud of the highly diverse set of hospital properties in our portfolio, which includes not-for-profit, public, and private hospital operators, as well as a strong mix of asset types, from general acute care hospitals to behavioral health facilities and inpatient rehabilitation facilities. This portfolio includes relationships with world-class hospital operators around the world. As we approach 2024, we remain confident in the value and strength of this portfolio. Next, I'd like to explain our levers for shareholder value creation. NPT owns real estate, and our cash flows predominantly come from long-term lease agreements with our tenants. There are a few important things you should be aware of about these leases. First, they are inflation protected. So in 2024, for instance, we expect $50 million in incremental cash rent and interest from our current portfolio based on prevailing rates of inflation. Another key point to keep in mind is that leasing offers a number of benefits to the operators themselves. By leasing, rather than owning real estate, hospitals create the capital flexibility to invest where it matters most, taking care of patients. Operators also benefit from a small and predictable rental expense, which typically amounts to a fraction of their average labor costs, versus the often unpredictable interest and principal payments associated with secured debt when choosing to own their own real estate. Our strategic investments in operators have been another key lever of shareholder value creation over the years. These investments not only facilitate better alignment of interest with our tenants, they have also been an excellent source of opportunities to grow and expand our portfolio. And when we have exited these investments, they have generated profitable returns, as evidenced most recently by our investments in Median, Atos, and Springstone. Because NPT invests in hospital real estate for the long term, 15, 30 plus years, we are also committed to ensuring the long-term viability of our hospitals for the communities they serve. There are times when high-quality hospital operators experience short-term financial challenges caused by unexpected events. The COVID-19 pandemic, the recent nursing shortages which exacerbated labor costs are excellent examples. In these rare situations, NPT will sometimes step in to provide temporary, limited support through working capital loans. These loans, which comprise only a very small percentage of our assets, carry market cash interest rates, are backed by strong collateral, include significant protections, and are certainly preferable to permanently cutting rent. We believe this is the right thing to do for the long-term value of our hospitals. Doesn't do our investors or the communities we serve any good to watch the right long-term operator for a facility become distracted by temporary and preventable financial challenges. So this is where we are today. 2 decades of successfully demonstrating our business model and safeguarding America's access to quality hospitals. And like any successful business, we've not gotten where we are by shying away from challenges. We tackle them head on so we can continue providing value. Let's face it, we're in a tough economy and there's a great deal of focus on inflation and higher interest rates. At the same time, our business cash flow profile, while still robust, has meaningfully changed over the past 18 months as a result of certain strategic asset sales and the extended timeline by which the full prospect restructuring is expected to take shape. Against this backdrop, much of the investment community has questioned our ability to refinance debt maturities, even ones that are several years out in time. The short answer is this: we have a number of attractive options for addressing scheduled debt maturities as a result of our recently announced capital allocation strategy. We are already taking action under this plan. For instance, hundreds of millions in cash proceeds from the sale of our Australia and Prime portfolios have already been deployed towards near-term debt paydown. We have also made the decision to adjust the size of our dividend to better align with our cash flow profile following the recent and pending asset divestitures. In total, relative to our previous dividend level, this is projected to save approximately $2.5 billion over the span of our debt maturities, while continuing to return substantial cash to our shareholders. We are actively working on other transactions that would decrease leverage even more quickly. We believe that the value of our underlying assets remains strong, as evidenced by the recent cash prices we've achieved on sales and the continued level of interest we see from sophisticated private investors. In closing, we strongly believe that MPT represents an attractive investment opportunity based on the unique nature of our hospital real estate, the careful structuring of our inflation-protected leases, the strength of our cash flows, and our current valuation discount relative to peers and of our own historical multiples. So, to you, our shareholders, again, I'd like to say thank you. Thank you for putting your trust in our proven business model over the past 20 years. As we continue to execute our value creation plan, we will be sharing more video updates directly with you. We appreciate your continued support. Thank you.